Are you concerned about losing your retirement savings in the stock market this year? Last year, in 2024, the stock market did extremely well, but the economic data suggested the opposite. Last year, inflation exploded and the Federal Reserve continued to raise rates. There was geopolitical strife, supply chain issues, manufacturing was weak across the board. And now in 2025, we have the same issues and more. Tariffs and the ensuing trade war has proven too much for the stock market. And we are in decline here in 2025. The market is steeped with uncertainty and the market hates uncertainty. Maybe you remember the 2008 banking crisis back in 2008, 2009. In October 2008, the stock market lost 20% in a single week. And the market index has lost over 50% at that time, turning our 401ks into 201ks. And there it is, right on the cover of My Advisor magazine, why 80% of Americans lost half of their portfolio. People relied and trusted the stock market. They took too much risk and they lost money. If you had saved, say, $500,000 to $1 million and the stock market had a bad run like it did in 2000 to 2003, look at where you would have ended up. How about retiring in 2008? Look at where you'd have ended up in 2009 if you retired at the wrong time. And some got stuck in both. Look at this, 2000 to 2013. You're even after 13 years, and that's assuming you didn't take any income. Let's assume you retired at 65. You would not be even until you were 78 years old, but would you be even? Not if you're taking income or your account is a retirement account, because you would be forced to take required minimum distributions, otherwise known as RMDs. And this happened again in 2022. The NASDAQ almost lost 40%. Look at this. Let me put this in perspective for you. I knew a guy who retired with just over $1 million in December of 21. I believe the worst time in the last 5 years. He lost almost $400,000 that next year, which is more than 4 times what he made in his previous 4 years in his job. A $400,000 or 40% loss in $1 million requires a 67% gain to get even. Do you feel confident to make that back while you're not working? If you're not spending the money by taking distributions, if you are doing that, you might not even get back to even in your lifetime. The balance in your stock market accounts have been declining each month this year, right now. Have you been avoiding checking your balance like many people? So what's your plan? Are you going to take the wait and see approach as your account gets potentially obliterated? Do you think riding out the market downturn and hoping it comes back is the right strategy? What if I could show you a way to not only protect some of your savings from this uncertainty while being able to participate in the market gains when the market does well? Now, I'd like to lay some groundwork first. Do you know that losing money in the stock market is 10 to 20 times more likely than being in a car wreck or having an homeowner's insurance claim? Have you insured your car and your home? You have, right? Have you ever thought about insuring your retirement assets or your savings? I know probably the reason you haven't is almost after 3 decades of doing this is because you probably don't know you could do it. Well, let me show you one way that you can insure your assets. There are a few ways we do this, but today I'll introduce one. The equity indexed annuity. And before you turn me off, because you've heard of them before, or they're not your type of thing, I would listen. Because if I had $1 for everyone who told me that, who ended up investing in an equity indexed annuity, I'd be retired. Equity indexed annuities were created by insurance companies to ensure your savings and income never run out. So, is it possible to have your cake and eat it too, where you can enjoy participating in market gains while the market goes up, yet you can protect your principal and never lose what you've earned when the market goes down? Well, this, my friend, is precisely what an equity index annuity does. These are not your grandfather's annuities. Index annuities are the reasons why more Americans are converting their savings into safe growth machines. This is how you can participate in the upside of the market without any of the downside risk. In fact, Americans entrust over $70 billion each year to index annuities. Well, the only way to get an index product like this that locks in your gains without ever losing money is through an insurance contract and through an agent like me. You cannot go to the company or to your own advisor. They need to be an agent and licensed with that company. So why would you not put some of your hard-earned money into an insurance company? Well, my question to you is, why wouldn't you? Little is it known that insurance companies are actually the backbone of America and where many banks put their capital reserves. So why wouldn't you get the insurance on your assets from a 100-year-old multi-billion-dollar insurance company backing you up? These are the oldest and safest institutions in the country. Now, remember Warren Buffett, the Oracle of Omaha? He's always quoted, and he's known for this quote specifically. Rule number 1, never lose money. Rule number 2, never forget rule number 1, especially in retirement. I want you to imagine never having to worry about losing money ever again on at least a portion of your savings. Isn't that reasonable? You see, let's take a look at this chart of the S&P 500 against an equity index annuity. If you have an equity index annuity, you lose nothing. If the market goes up, you participate in those gains, and at the end of your policy year, you earn that credit and the balance gets stepped up. So not only is your principal fully guaranteed, but you're guaranteeing your previous gains as well, meaning you'll never be in a position to lose what you've earned either. So if the market crashes the following year, you still get to keep those gains that you just locked in. You may be wondering, well, am I going to have any access to my money if I'm not taking income in this annuity? What if I need to fix the roof of the car? Well, absolutely. That's why I recommend specifically equity index annuities where you can withdraw 10% of your growing account balance penalty-free each year. Not only are you able to capture and protect your gains, but some insurance companies allow you to turn on and off the income tap at any point and transform your accounts into a guaranteed income stream for life. This is not too good to be true. This is what you get with a well-structured annuity contract. This is your own self-made private pension plan. Your pension can go on for as long as your lifetime or even your spouse if you're married. There is no other asset class that gives you complete peace of mind that you will never outlive your savings. Think of it this way: a paycheck for life without having to work, or an investment account which can't lose money. Isn't this why we invest in the first place? The stock market is not the only game in town. If you'd like some of your money protected from losses, join the millions of Americans who choose a stress-free and rock-solid retirement plan that preserves your hard-earned wealth. Go ahead and browse the options at my one-stop annuity shop, and let's transform your retirement into protected growth, guaranteed for life machine. Thank you for listening.